Market observations for Coffs Harbour, New South Wales. Now, this is a by request deep dive today into the market dynamic of this coastal city in northern New South Wales. This has been requested via user survey in the High Performance Property Investment Facebook group. So head over to that group if you would like to participate in any future surveys or questions. Now let's take a deep dive today into Coffs Harbour. I'll be jumping into obviously the geographic makeup of the area, where to potentially position ourselves. But firstly, I'm going to take a deeper dive into the market conditions we're seeing as of today. So I might break this analysis because it's into an analysis of, is it a good time to be potentially buying there now? And then if it is, assuming that it is, where particularly would you purchase? So this is a part one. Today I'll be looking at the larger city area, the local government area level, the suburb level, and then pausing. And then as a follow-up, we're going to be investigating the individual street clusters in the suburb identified and the individual properties on the market. And then once again, throwing it out to you as the audience. Which property would you like us to focus on to do our end-to-end due diligence on a deal? So we're going to go from top to bottom all the way through for Coffs Harbour to investigate the market opportunity firstly, and then try and pinpoint the exact properties to target in the area, assumably if it is a worthy investment. So let's dive right in. I'll just move along here. We do start these investigations with an analysis of population. Okay, I'll be diving into the exact science behind this in a moment, but let's start with observations of population trend. So we see here where we're just touching on 1% per annum population growth. That's around the national average, if not slightly under. So this is not a story of necessarily population growth. If the Melbourne and Sydney residents are moving north, they generally go a little bit further, potentially right up into, at least Byron Bay or into Queensland. So we don't generally get that migration or that mass migration, upside from the Coffs Harbour market, but we are still trending at around 1% per annum population growth. So it is still existent, not in the realms of Brisbane's or Perth, as we discovered more recently in those videos, but it is quite competitive with regional markets generally. Probably not hitting as hard as the Byron Bays of the world, the Sunshine Coast, those main, heartlands of coastal Australia where the southern migrants are moving north towards. So it's sort of missing out on that both. It's not your 2, 3, 4, 5% per annum population growth, it's a 1. So let's, we're not really moving the dial too much there. Let's have a look at employment. We have been in a very volatile, employment environment there in Coffs Harbour for the last 4 years, trending between 5 and 7.5%. It seems to be the ongoing band. And once again, we have had a dip. So going into COVID, we were in a nice tightening, efficient employment market, down towards 5% unemployed, which is about as low as we ever go in Australia. And that has then moved back out again through the COVID period. Okay, obviously there is a lag with the data that we have available in this employment data, so we are running behind time. This is the part of the picture that we don't see. Which direction have we gone in the last 6 months? Okay, so we are. I don't think employment is posing issues for Coffs Harbour. That's probably the general takeaway from the employment landscape. Is it's not even in this band, it's not causing dramatic concern for me, especially when you can pinpoint into particular suburbs that even in a higher unemployment market would still be relatively untouched. When we can dive into that deeper layer, we can remove this exposure to these individual elements. So employment, high level, not really causing of concern. Industry sectors. So this is not a trend line. This is a snapshot of the market today. So this is for us to understand the general makeup of the market. What I like to see in this type of analysis is I don't like to see an over-reliance on any particular industry sector. Okay, we've been burnt in the past by going into one-horse towns, mining towns, chasing yields, chasing these employment hubs. Well, guess what? Mining changed. FIFO became a thing, and people were left holding the bag 10 or 15 years ago, where they'd invested in these mining towns, thinking there's a mining boom, and then everyone works remotely. And all the workers go from renting properties off mums and dads to being put into shared accommodation supplied by the employer. Okay, so we don't like, over-reliance on an industry sector. The argument can be made that healthcare is an exception to the rule. Healthcare is a basic need. It's a basic human need. It's provided in many cases majority by the government. Okay, so healthcare is something that, if you were to pick an employment sector to be over-reliant upon, it would be health. And you have to remember, it's not represented on the slide so far, but Coffs Harbour is an ageing population. It has a high percentage of retirees who have made the move north, packed up their stumps and are now living the life. All right, so health does need to be a big part of employment within Coffs Harbour now and ongoing into the future. And we'll get onto that in a moment. But we do have relatively diverse employment. That's the next thing I like to see is diversity. It is spread across the big, ticket items, healthcare, retail, tourism in coming into accommodation and food services. So these two linked, education and training, construction. Okay, it's starting to taper off here, obviously. So we're in a tourist-based ageing. So the residents are ageing, but there is a reliance and an element to this area around tourism. That's something that we've got to watch out for with the suburbs that we are targeting. So I'll come back to that. Now, how is this changing over time? So here at Ripehouse Advisory, we do have our own internal database, which we maintain. It tracks around 1,500 projects in Australia. You can see all of these many dots on the map here. Where are we into Coffs Harbour? So each of these dots on the map is a $50 million capitalisation project or above. Okay, so $50 million budget in any of those industry sectors. So it could be health, it could be in infrastructure, it could be a new hotel, it could be a new property development. And this is not really comparing and contrasting this to other areas, so I'll do that for us. But we are only really seeing 2 projects of $50 million or above for Coffs Harbour. You can see here all the way up and down the coast, we are not seeing any other projects, and we might go a little bit further north to compare and contrast with Lismore, Byron Bay, where we're not actually seeing any new projects. Okay, so at least we have some activity, but generally it's a bit of an unloved part of Australia at the moment for the larger infrastructure and investment type projects. Not really much activity all the way up and down the coast in tourism. They did a lot of road upgrades and things over the last 10 years which have ceased. But Coffs Harbour does have 2. When you compare and contrast this to what's going on in regional Victoria, it's light and day. Okay, regional Victoria, you've got dozens of projects impacting regional clusters now and for a long pipeline into the future. So at a national level, we're not really seeing anything that's too confronting, but we do have 2 projects. So, there is some activity, and these 2 projects are quite important. So we have just under $200 million being invested in a hospital infrastructure expansion. Okay, that's a big ticket item. Property prices do track and correlate very strongly to hospital upgrades. Okay, we've done very well over the time in places like Wagga Wagga. If you compare and contrast Wagga to Coffs Harbour, over the last few years, around the same population, $450 million invested in the Wagga Wagga base hospital. This is 200. Wagga Wagga property prices have done quite well over the last year, 18 months. We're probably missing the buy point there now, but we're trying to follow these projects across the country. Before Wagga, it was Bendigo, slightly larger than Coffs Harbour, but once again, a large hospital upgrade in Bendigo, which kickstarted the economy and has caused 3 years' worth of overperformance. All right, so these types of hospital expansions, upgrades, they cannot be understated, but is it moving the dial here at $200 million? We do have one other project, which is a highway upgrade, Coffs Harbour Bypass. These are the types of projects where it's very difficult to establish correlations to property price growth, because is it benefiting the residents, or is it benefiting people to pass through the town and bypass it altogether? And then even if it is determined that it is benefiting the residents, is it benefiting them today or over the next 10 years? Or is it in 10 years that they realise that now getting to work is much easier and I have now been living in this area because it is accessible to me? That's a slower burn. So these types of larger infrastructure, public utility projects, they are less direct. So I wouldn't really weight that too far into our consideration. But this hospital upgrade here is definitely something to be aware of, and I might be coming back to that shortly when we're doing our analysis. So hopefully that's interesting and insightful there around what is coming up in the pipeline. Hospital upgrade, good, but overall probably not really punching above its weight. I would be expecting to see, at least half a dozen other projects supporting this city going through a true reconnaissance period. All we're seeing really now is an incremental improvement to the hospital, which you would typically see over every 10 to 15 year cycle in one of these cities. It's not a mass reconnaissance, overhaul of a whole demographic or city. Okay, moving forward into the actual buy window. So remember, property investment is a science. We've looked at employment, new projects, lifestyle, population. I've only really touched on those at a high level today. We minus new supply from this conversation, and so in this analysis, I'll be referring to some charts that help us understand supply. But then I'm also going to be going to the map and trying to identify any risk areas, because this is a buy request, and this formula results in the overall opportunity. Okay, so that's how we sort of generally see things at a high level here at Ripehouse Advisory. Now, before we get too far into this, before we go into this buy-side analysis, if you like what you're hearing, if this is of interest to you, then please click the subscribe button and make sure that you select the bell icon so you are notified the moment we release any further market observations or research material. Now, if this is once again of interest to you, we have recently released a Brisbane market observations and a Perth City market observations video. So do make sure that you are closely informed, because they are released every week or two. With that in mind, let's dive into the purchase analysis. So this is the buy side purchase analysis for the Coffs Harbour local government area. Now, first chart I'd like to look at is stock inventory. So this is a supply side measure. How many new listings are entering into the market? And obviously, as supply is entering into a market, it is generally being bought. Okay, so the supply and demand dynamic is starting to be introduced into this type of analysis. Okay, so what we're seeing here is fluctuation. We are seeing a tightening in the market down here into April 2021, and that's an important thing to note. Okay, because that kicks off the market buy zone, and this is a cheat sheet further on into the session. This kicks off the actual buy zone in this market, and so this is now a question of, is it still open? Because this was the tightening in the market that kicked off the price growth, and that's when we look for. But now we're determining almost 12 months, 9 months later, is the buying window still open? We had the tightening in the market. We had through the winter haze, a slowdown in the market, which is quite typical, coming here through winter, and then a tightening in supply coming into the spring buying season, and then it has tapered off heading into Christmas, which is where we are now. And this taper is not necessarily seasonal. It is coming down to price pressure. All right, so we have had a tightening event here in April, and that is of particular note. So let's take a deep dive through the next couple of slides, because that tightening in the market here caused a dramatic tightening in days on market. We've gone from 60 down to 20 to 25. And if you can remember from our previous videos, 20 days on market is about the minimum that you can ever physically see. It takes time to list a property, have an open home, have offers, offer versus offer, have that negotiation period, going through a conditional phase when you might have a building and pest inspector to go unconditional. And here at Ripehouse Advisory, as a research house, we measure days on market from the time the property is listed to the time it goes unconditional. So it's very difficult for it to be ever really any less than 20, which is where it has sat throughout 2021. After that initial tightening, it's come down to a very efficient constricted market, and it started to pop back up again. All right, so we've already seen a release in this pressure occurring heading into Christmas. So it's a very important point. High competition, so further restating what we're seeing in this market. Extremely high competition, cleaning out the available stock in the market in March, causing days on market to dramatically reduce, and we are still seeing high competition in this market here, and then it's stabilised, and then we've seen it pop in September, clear the market back out again, and now the pressure has dropped off. All right, so we definitely did see a very strong buy zone here in March, April, a tightening of the market, and it's released. And we did see, when the spring buying season came into fore here in September, we did see some good, strong activity, but it hasn't held. Okay, we can see that it's already cleared through the market and the demand has dropped off, and I'll show you why in a moment, and days on market has started to pop back up again. Whether it continues to constrict or continues to trend upwards is in question. We haven't discerned that yet, but it definitely has seen a release of pressure. Days of remaining supply, not really much told to us here. So remember, this is a combination between supply and how quickly that supply is restocked into a market. It has been quite stable throughout this period. We are somewhere between the range of Brisbane and Perth. Okay, so there is a reasonable amount of supply coming into the market, and it is being reasonably taken back out of the market. It is quite a stable and somewhat tight market here, but it has came back into an efficient market dynamic, which is, it's not really telling us much. This slide is middle ground. It's not really showing us one way or another. Remember, I'm only looking at the house line on these charts. We don't really look at the house and units line. We're looking at houses. Very rarely do we look at suburbs that have got the most common and in-demand property type as units. We are looking at suburbs more, areas more generally that have predominantly houses as the most common and in-demand property type. That's what we need to be focusing on. All right, so this is probably going to give you some example about why the heat might be coming out of this market. All right, because through the tightening period, if you can remember, this was the buy zone. This was when we should have entered this market, March and April. And you can see what has happened to property prices since. We've had a good 10, 12, 15% price growth over that 6-month period. And this is a trend that we've seen in many parts of the country, but we could have picked it in this market because of the tightening of that market. Price is a very strong natural handbrake on demand. Okay, so as property prices have increased, we can remember we also had another tightening of the market here in September with a lot of competition. That caused this pop in value here, and then the market has dissipated very quickly. It's not held that price, or it's held the price, but it hasn't created an environment for further price growth. It's plateaued. Okay, so the market steam has just evaporated heading into Christmas. Which way is this going to go into the future? We don't know. It's definitely not a buy zone now. It's speculation. If you were to buy here now, it is speculating. If you were to buy here, you're far more sure of the market direction from my perspective. And this is once again reiterating why the steam is coming out of the market. We can see houses here in the blue this time, when they really started to rocket off throughout 2021, and that's been the market this year. Is it going to stabilise going into 2022? That's the question. This is probably showing you, once again, the blue line is the houses. This is when things, properties were selling for the asking price. And then this is where we've now seen them starting to be sold for 3% over the asking price. So we've seen, a lot of, this is a representation of a very heated market dynamic, and it has tapered off. So once again, this was further confirming our buy zone. That's when the market did really constrict. Now, the rental side. Remember, there is a very strong correlation between the rental side of a market and the buy side of a market. The rental side of the market generally leads the buy side. Let's see if it is the case here. This is the activity that I like to have a look at. The number of rental listings in a market shows us the depth. Okay, that has consistently been increasing throughout the year. Very few rental listings, a very constricted rental market here. But as the year has gone on, we've seen the number of listings coming into the market increasing. Okay, so the level of supply is outstripping the level of demand in the rental side of the equation. This was a very tight rental market. This causes people to move to the buy side. They can't, there's not many rentals. They need to move to the market because of the hospital expansion, or because of COVID, they want to move north, or they're getting older and they want to retire and they're just going to fast track these plans and move to Coffs Harbour. Okay, they generally go in and dip the toe in and rent first, and we have a very tight rental market. Okay, heading here into January, into March, but that's continued to ease throughout to the year. So we're heading now into Christmas, and we don't have the same market dynamics that we did last year. We don't have that tight rental market to lead a further cycle in this market, at least in the shorter term. Days on market for rental rolling, we can see here, once again, the tightening of the market here. Very, very fast times to rent, but it has been a very consistent story throughout the year. Okay, we're not seeing a dramatic tightening once again. It's probably more of a seasonal tightening and not a major shift like we saw earlier on in this year. So not really much to be told from the days of remaining rental supply. This is a big one for me because I like to see increases in asking rents leading price growth. In this case, we've had a tightening in the rental market. People are paying a lot more to rent. It happens very quickly. Mums and dads going to rent a property, application over application over application. They're having to bid another $20 a week, to snag the same 3-bedroom property that they're hoping to rent. Very quickly, they walk down to the mortgage broker and get a loan to buy. They just step out on a ledge and they move to the buy side very quickly. And we all saw this occurring in March and April. We're not seeing the same dynamic now. All right, we've seen rents stabilising and constraining. We're not seeing the market exploding and the separation and disparity in the market increasing. We're seeing it tightening. So we're not seeing a rental market, leading a buy-side market into 2022. It's just not going to happen. This market is a stable rental market, which is actually not necessarily typical of many markets across the country. In many markets across the country, we have seen rents continuing to skyrocket in the last 3 months. Not so in Coffs Harbour. This is probably just a quick slide here around rental yields. This is the price separation of rental yields, so the lower, median and upper quartiles. We have seen, rents generally keeping pace with price growth, but it has seemed to be falling off for the last 6 months. So this is just a simple function of prices continuing to grow and the asking rents now stabilising. So as investors, our yields are being compressed. This is not an environment I like to be operating in. Okay, I like to be operating here and not here. And I like to be operating in a market where the yields are increasing, rents are increasing, and people are moving over into a buy side, which was March and April. So that sort of probably completes our market analysis of Coffs Harbour. For me, it is a very strong, there are reasonable grounds for an ongoing growth story. But if you were to buy there today, you've probably missed the boat. 6 months ago was the optimum buying window. For me, when I want to look at an investment market, I can pick anywhere in the whole country. I'm getting very fussy down to the week about my buy zone. And this is a market where our buy zone was late March, early April of 2021. And since then, there's no compelling evidence for me that this buy zone is going to be opening up anytime soon. That's not to say the market's not going to grow. All right, we might have enough underlying market dynamic to continue sustaining good, strong growth for the next 2 or 3 years. But it just means that the prime opportunity to enter this market has been missed. And when that is the case, it's a big country out there. There's other markets that are lining up that are presenting this human story. This tourist, ageing, hospital expansion, people moving north story, but we're in the buying window this week. So we can have our cake and eat it too. So that's probably the point. For me, it's not necessarily a buy, but for the point of this exercise, let's assume that it is. Let's keep going down this path. We're going to assume that we are going to buy in Coffs Harbour. Where would we buy there? And we're going to be throwing this once again back out to you guys to select the individual properties you would like us to analyse. So as a CBD area, okay, as a city of 70,000 people, 80,000 people, we have the hospital offset. So the hospital is not where generally residents are living. It is out to the side, just down into this southern area. So I've just clicked on a button here. Obviously, price, the main driver of price on a suburb versus suburb level is the accessibility to the beach, is the access to the beach. This drives these coastal towns. As you go inland, you generally see socio-economic conditions deteriorate, but we do have the chief medical hospital employer and the upgrades occurring in this inland area. It's a lovely coastal city. When we're coming into these markets, and this might be a little bit of homework for everyone, maybe even engaging comments on this video, let's talk about it. When we come into these markets, we generally stay away from the beach areas. Great for growth ongoing. Okay, generally we've seen a very strong correlation between proximity to beach and ongoing price growth, but yields are generally compressed. We're dealing with strong owner-occupier, strong retiree demographics who are not renting, generally higher price point, pushing up growth, great capital growth. As an investor, it's generally your first and last investment. Okay, you don't have the serviceability with 1%, 2%, 3% yields to then go off and buy further investments. Your serviceability is ruined. Okay, so generally when we're coming into these markets, we're buying into the overall coastal story, but we're investing in the supporting suburbs, the satellite suburbs that provide the services to the retirees. Okay, so that's all of the areas. If the hospital's down here, where do people who work at the hospital live? Is it these areas throughout here? That's where I would start my investigation for a suburb. Okay, so we do have a Coffs Harbour suburb that has been selected by the audience as well. The next part of this process, I'm going to be looking at the suburb dynamic, the Coffs Harbour suburb dynamic. And we're going to be determining, is the local government area, the city level buying dynamic reinforced and amplified by the suburb, or is this suburb a laggard area? And then I'm going to be doing a street by street analysis of the core Coffs Harbour area. And I'm going to be working out those sweet spot areas we want to be targeting to maximise our growth results and those areas we want to stay away from. And then we've already thrown the keys to our audience. So over at High Performance Property Investment Group, we have thrown the keys to you to identify the properties in that suburb, which ones you would like us to analyse and to take the deep dive on. So that's all part of part 2 of the Coffs Harbour deep dive. And by the way, if you would like to access more property investment, education, research and observations, then please click on one of the videos here and make sure that you subscribe to this channel and hit the bell icon so you are the first to know when we release a new video. Thank you.